Whenever someone says free money, my first thought is, how much does it cost or what's the catch? But you have finally found what you've been looking for the entire time, because what I do is 100% free. In this video, I'll break the charts down with over 5 years of experience. I've been interviewed by prop firms, showcasing my consistency in the markets. I have months where I have a 100% win rate. Last time, everybody who joined the live trading session learned how to apply the concepts themselves, while also making free money along the way. And the best part, you can do it yourself. So make sure to watch the video all the way through, because only that way I can guarantee that you will not miss key details on how to implement the same concepts I'm using. Yeah, so basically on the weekly chart, not much has changed so far because we are still in this kind of consolidation. This is just the internal consolidation that we are hovering around right now, which is very good for this way of trading because we're looking for a very low risk reward. But this is just a very internal consolidation. The entire consolidation is this part that I'm marking out right now. This is the actual consolidation. So it's kind of like a rabbit hole. So this is the first rabbit hole. Then you zoom in and then there's the next rabbit hole that we are currently in. The very usual, right? And then we also have relative equal lows. Now we already know that relative equal lows are a pretty big magnet on to the up or downside. And having this framework alone would be suggesting that we will go on to the downside. And this is not wrong, because this is one of those days where you can trade in any direction and probably make money. But you should always still pick one sort of direction, because one is always better than the other, right? Even if you would win with both directions, one of them will be better, especially when you don't want to be into drawdown for multiple days. You should rather pick the better one. So this framework alone, okay, we'll talk about more on why I am looking at a different idea. But this framework alone and what we have previously seen, and I've been teaching this to my mentorship, that we will go on to the downside because we have this FEG and we have the relative equal lows, right? So the relative equal lows are, if you watch every video and also those live streams, you can see a clear pattern. We always have a higher draw on liquidity and we just have a very recent and easy target liquidity, right? And they two have to line up, right? If you just have a higher form of liquidity, but then you don't have something to trade directly into then you don't have a framework. That is not a trade. You need to have two of those. Higher time frame, or not even higher time frame, just higher draw on liquidity, or priority wise, just more liquidity overall, more stop losses in here, and just a very recent one. Now, but the reason is, even though this is going lower right now, if you go on to the weekly and also check what day it is right now. So this entire weird candle was the Monday. This right now is a Tuesday. Now, if you know anything about weekly profiles, totally screw them. I don't believe really in the traditional way of weekly profiles, but I do like to look out for them because some days are more likely to be either the high or the low of the day, right? These are just basic facts of the market. This is not something that, I don't know, you have seen in a ICT video and he be saying, okay, well, this is the weekly market profile. No, this is actual facts that I have been backtested over hundreds and thousands of hours. So you can trust me on this. Now, we'll go into the weekly profile in just a bit, but first of all, I want to show you a very clear and simple example on why I have a different approach to this day. So basically what we have right now is we have still this gap, okay? I'm going to mark it out for you guys. We have this gap. And what have we talked about earlier? I'm going to remove this for now so it doesn't get too messy. We have talked about that the gaps usually like to be filled out with a body closure. Now, once again, it doesn't always happen, you know, there are exceptions. But most of the times we will go back into those gaps and fill it out with an entire body closure, which is suggesting to me that this is rather bullish than bearish, although a lot of people will see the opposite. Now, looking at it from a more long-term perspective though, right? I do think that we will go for lower prices, okay, if we go into the monthly. Now, quick thing, just as a note for you, don't look into the monthly every single day. I don't do that. I don't do that as well. I'm not looking into the monthly every single day. Now for analysis, I'm presenting to you so everybody can follow along. But I myself, if I personally trade, it's only once or twice a month that I'm looking at it, okay? So once again, looking into the daily chart, now onto the 4-hour chart. This is the next draw on liquidity, right? So you could potentially take a scalp onto this, but don't do it, okay? But it is also very safe to say because we're just very close to it. This is not an actual trade you could be taking basically, and especially because we have the relative equal lows. But I think, or most certainly, the relative equal lows are unfinished business, but for another day, right? This is why if you've seen the previous videos about the relative equal highs and lows, a very common misunderstanding is that they just take the relative equal lows and highs and they just think, okay, I will just short or long in them. And that is a problem with it. Relative equal highs and lows, they don't work just on their own. You have to combine with something else. And just from experience, right? Just from kind of weighting out. So what holds more weight? Are the relative equal lows or highs hold more weight, or the gap holds more weight? I mean, personally, I am the number one fan of relative equal lows like that, right? There's no guy on the internet or in the trading space that is so fascinated by this concept. But I still like to take a very objective approach. The objective approach is that we'll go for the gap, because it needs to be taken out with a body. Now guys, you can have the best strategy, the best risk management, and also be a master at psychology, but every professional trader needs a professional journal. That's why I personally use TradeLens. Now if you want a 10% discount, it's the second link in the description, right? No, but still, that doesn't mean that the relative equal lows don't help us for now. They will most definitely help us in the future for taking shorts, but right now it doesn't mean that they're completely useless. They are giving us half of a magnet in that sense, that we will go onto this FVG first before we can participate in any sort of longing business, okay? And also I would like to check the premium to discount. Now here's the next thing. We have not gotten into a premium to discount yet. So this is basically telling us that we don't want to take any kinds of longs before we get into premium to discount. Now, if I haven't drawn out the premium to discount, a lot of people would assume we will go for the relative equal lows, for those ones right that I'm drawing out right now, not the lower ones, and then, you know, just trade higher. But no, you can actually take a little bit of a better entry just by drawing out the premium to discount tool, man. It's not really that hard, right? You can literally just say, okay, this is already giving us a little bit of more movement, right? That we can be wrong or right, depending, just by having this a little bit of information drawn out, right? Because we always like to return to a premium to discount. If you have a chart, let me draw it out for you real quick. If you have a chart like that, price will always return back into equilibrium. Now there are instances where it trades higher, right? It just trades higher, but then people say, okay, it never returned to my equilibrium. That's why you have to redraw your premium to discount. You have to readjust it, because if you don't, then of course there will be times where it never returns back into equilibrium. So you have to redraw it each time, even if it's just a small high, you have to redraw it each and every time, because that is the only way that is ensuring you that we will eventually fall back into the equilibrium again. So this is another thing. So what is that basically telling us? We want to take longs, even though we have very clean, right? Very clean at first glance. This looks like, okay, we will go on to the downside. But today we want to take longs actually. Now, another thing which is often overlooked is just by looking into the daily chart. Now, if you have seen my daily buys video, you know that if we have a very strong up close candle or down close candle, then it is more likely that we will also fall into that direction, right? That is the case a lot of the times. Now, in this case specifically, we are not so close onto the previous day high compared to the open of this current candle that we're trading in right now. But if you compare it to the low, then that's like a whole different story, right? Because if you compare it from the opening price point of the current candle that we're trading in, that is 31 pips. Now, to some people, for some pairs, that is saying, okay, well, that is only 30 pips. We can do that in a day, but not for this pair. Doing 30 pips or more is a special occurrence. Now, of course, before people say, well, you know, there's candles like this where we move 90 pips. Of course, there are days like that. But most of the time, as you can see, we don't really move that much in a single day, right? Check it out for yourself in the chart. Don't take my word for it, but do yourself a favor and check it out. Especially if you combine this with the narrative that we're having right now. The narrative right now is just that we're in a consolidation. So 30 pips is already a big outlier. Not even for the entire pair, but also combined with the current narrative that we're in. The current market structure, which is consolidating. So once again, if we go into the 1 hour, or finally, for everybody that has been waiting and doesn't give a fuck about the education, there's no problem. I also offer copy trading. You can just straight up copy trade me. You don't have to go through all of these complicated analysis, although I make it as easy as possible in my mentorship. You can also just straight up copy me, and the entry fee is literally zero, so you don't even have to pay anything for it. But here's the trade. You want to, okay, let me quickly remove this, man, because this is pain. You want to long it when it comes onto this line on the premium to discount, right? And your stop loss wants to be at least absolute minimum below this low, but I personally like to go for even more, to have even more room to play with. That's basically the entire trade for today. Now screenshot it, send it to your mom, send it to your grandma, your grandpa, I don't care. Send it to everybody that knows it, because this will hit take profit. I guarantee you that. And everybody that is sitting with me in the Discord right now will also make money out of this. So if you have any questions, then let me know right now. So the risk reward. So you probably know the very traditional way of trading, right? So you have risk to reward, let's just say 1, 4, 3, right? Something like that. And then it goes in here. And then if you lose 1. But if you win, let's just say 3, right? This is what you trade. Am I right?
Yes.
Yeah, well, this win rate or this way of trading has a low win rate, okay? So you're not winning enough of the times with this kind of stuff, basically. This is shit. The reason for that is because a lot of the times people who trade this have a 20-30% win rate, right? That is low, because you cannot have a 90% win rate with having such a high risk to reward, basically. That is the problem, right? So my question to you, have you ever seen somebody who has a 95% win rate, right? Because the chances are very big that you haven't seen so far. And what I do has a 95% win rate, right? That's why I'm so confident. Have you ever seen a trade that is so confident that a trade will play out, right? So maybe there is some kind of trader who says, okay, I know that this will take profit, and then it actually did, but they are not able to do this consistently. I am able to do this consistently, right? So the only way for you to have a 95% win rate is by having a low risk to reward, right? So even if I lose, you know, so you would now say, okay, well, if you lose so much, but that is no problem. If you win so many times, right? And you have one loss, then it doesn't matter, because you have so many different wins. You get what I'm saying? So even if you lose one time, so here this was a loss, that's no problem, because we just win so many times. Basically what we have the relative equal lows in here. We have the relative equal lows in here. This would suggest, okay, we will go lower. But the problem is that we have such a counter argument for that, which is the weekly gap. That is suggesting to us that we will go higher. Now, but we also have the FEG, which is the next draw on liquidity. We will go on to the FEG first, and then we will only go higher. right? This doesn't have to look specifically like this, but something along the lines, maybe something like this, then it trades in here, goes up, then down again, but then eventually it will go back up again. That's basically the entire framework. You have made it this far into the video, and let me be very clear about this one. You can go two paths in trading. Either you're taking the path that I had to take, which led me to countless of platform challenges being blown, and also personal accounts that I have lost. The list goes on. Or you can also take the shortcut, being mentored by somebody who has 5 years of experience, more than 500k in total funding, and also multiple prop firms. Now, I have been interviewed by prop firms where I basically explain how I've gotten to all of those payouts. When you're trading for this long, your win rate is extremely high. That is why we barely get into any kind of drawdown. Now, and this is not just a regular mentorship, you will get access to everything I have learned over the past 5 years of experience. So if you want to learn how to get the same results, it's the first link in the description.